The time now coming up on 8:45, and Wall Street gets fired up this morning by the latest inflation numbers, up 273 points for the Dow at 34,534 right now. That following the news from the government that inflation rose at an annual rate of about 3%, best numbers in a couple of years. Some reaction to that from Ernie Burns of Burns Estate Planning and Wealth Advisors. Good morning to you.
Good morning.
Your thoughts?
Well, it's a positive number. It's 12 months straight now that the CPI numbers come down. The core rate's still at 4.8, but that's also down also. So now what we're looking at is probably a soft landing. We've had 2 consecutive quarters in a row, so we're in a recession.
Meaning, when you say soft landing, meaning that the economy doesn't crash.
Right, right. Last month was the first month that, food prices have not gone up. I know everybody's happy about that. And because of that, and then also the core overall lowering and the CPI lowering, it looks like it's a soft landing. Even with jobs reports looking very steady.
And sometimes quite surprising too.
Yeah.
So the Fed's position has been, look, we're going to raise interest rates, we're going to make it harder to borrow money, we're going to dampen down economic activity, people will have less to spend, that sort of thing, and that will bring down inflation. So how does the Fed respond to this?
Feds they promised another quarter-point increase, but they could look at this, as I told a lot of our clients, they could pause in the coming weeks and wait till September, which will be a plus. However, they did promise a quarter-point increase. Now, the market's already got that factored in. However, the market's reacted so positive this morning because they were expecting 3.1.5, and we finished at 3. Win-win. There have been those people who have supported the Fed, said, look, this has got to be done. Others have looked at this and said, this is overkill. Is there a risk here if the Fed raises interest rates again that it does so in a way that is over what's necessary? Yes, he basically did this a couple years back when he paused
Jerome
too
Powell,
long. Jerome Powell paused too long. So it is a possibility. We won't know that for a while, but here's the deal. He's been more aggressive than any Fed in the past. With, I think he had 10 hikes in 12 months. So
Which is saying something if you go back to the Jimmy Carter, Ronald Reagan.
That's right, 70s and 80s.
When Paul Volcker and the Fed were really going crazy. That's a little inside the weeds there. But the point is, we've really had kind of an unprecedented period of very cheap money followed by these very aggressive rates.
Right, so if he raises too fast, if he keeps raising, that could really hurt the economy long term. Now, he could just pause and not lower interest rates and have the same effect, because a lot of these indicators and what he's already done are lagging indicators, and that's why it continues going down. Even though he went from 3/4 point to 1/2 point to 1/4 point these last couple increases, you're still seeing these indicators coming through and showing that it has worked in the past.
Anybody who's shopped for a house or shopped for a car knows that, wow, they're effectively a lot more expensive than they were a couple of years ago.
Absolutely.
Because of interest rates. Do you see anytime soon a loosening of interest rates?
Not until next year. I don't think he'll start lowering them until next year. He could pause the rest of the year, and he's going to have a great effect if he did that. And he also could raise it one more time. I think that would be the last time he raised it a quarter. But by just him pausing would still reduce the CPI numbers. But it won't be till next year before he starts lowering interest rates.
All right, Ernie Burns, fascinating stuff as always. Thanks,
Right.
Ernie, with
Thank
the news that inflation now running at 3% annually.